Hi, thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis. Sometimes it could come from the economic calendar or a combination of that as well as headline news or geopolitical. And sometimes it throws a little wrench in things and confuses things by when the market sentiment changes, where good news is now bad news and vice versa. We're here to kind of give those explanations for you so that way you can have a better understanding of what's going on with the markets and why it's doing what it's doing, and hopefully that it gives you the information you're looking for when if you're looking to refinance or buy. So you're probably following rates so you can lock in, or maybe wait a little bit. Or if you're just in the industry, just looking to see what's going on with the industry and see what's where the markets are heading, and hopefully this will give you that information that you're looking for. Without further ado, we'll just. Oh, excuse me. I'm sorry about that. I usually like to give a little something about myself. I am a loan officer. I do work with the national lender. We do loans in all 50 states. So if we can be of service to you, getting you pre-approved and buy your next property, or run numbers and get your refinance taken care of for you, please reach out. We'd love to help you out with that. But we're also here as a resource for you folks. If you guys got any questions about anything, we'd love to be able to answer any questions that you might have. So please feel free to get to us with those. Reach out to us. Uh, so with again now to go on without further ado, we'll start off with the economic calendar, and it's a pretty light day today. We do got the ISM manufacturing PMI for the month of April. So March it was at 57.1. Forecast is supposed to be a slight uptick to 57.6, and actually it went downward to 55.4. And a lot of this is being attributed to the bottleneck of the supply chains and the inflation and everything else that's kicking in here. So this is what's kind of contributing to it. Now, on this index, anything above 50 is expansion, so we still got some expansion. But once you go below 50 is when it starts contracting a bit. Last but not least, we got the construction spending, which is a very minor report. We don't really have much emphasis on it, but ISM manufacturing we do. Um, anyways, to go back to construction spending, so February rose 0.5%. Forecast was 0.7% for March, and it actually way missed it way out big time at 0.1%. So it's going upwards. It only went up by 0.1%. All right, so what's affecting the markets today? Well, again, the lockdowns in China is playing this a bit of a part right now because that is, as we talked about the ISM manufacturing, it is creating a bottleneck in supply chains, and thus also going to create some inflationary. But most importantly, this week we got the Fed meeting. Their FOMC meeting begins tomorrow, and they'll give their announcement on Wednesday. So investors are just simply preparing for what's ahead to a very hawkish uh, Fed right now. And at this meeting, we're expecting to get a 0.5 point uh, rate hike. Now, there's been debates about where they're going to go forward. Some people believe there's going to be 50 basis point rate hikes in a row. But now there's also speculation about June and maybe July at a 3/4 of a point. So that could go up to 75 basis points. So we'll have to kind of wait and see how that comes up. Now, also another big get is at this meeting they're expecting to begin their balance sheet reduction. So they want to try and normalize it. So they're going to start implementing that probably here very shortly. Uh, we'll get more information on that on Wednesday, and that one is kind of a big one as well. That one's the market pretty much. Right now, the market should be pretty much priced in to where things are at. But again, um, we're going to have to wait and see what the Fed comes out. They want to see how it's going to be rolled out, how aggressive it is, and how they're trying to unload their mortgage-backed securities and treasuries. So we'll have to kind of wait and see how they plan to implement this coming forward. So this is what's kind of driving the markets. So today we got a lot of sellers in the MBS, which is mortgage-backed securities, which drives interest rates. We are now just off of our lows. We're down like 36. Now we're at 27 basis points. So here's kind of the volatility of today. So you see how right off the bat, as soon as the doors open, they start dropping quite a bit. We did get a little bit of reprieve a little bit. Then we came back down. Now we kind of regained some of that. So right now we're down about 27 basis points. And what does that mean? Well, our rate changes aren't going to be as nice as it was on Friday. Even though we had a pretty bad day Friday, it's even worse today. So we mortgage rates did climb a little bit higher today as a result of this. And then next, we got the 10-year Treasury. 10-year Treasury's knocking at the door of 3%. Right now, we're at 2.99 right now. So again, we're not at that 3% threshold here very soon here, and currently at 2.99. Now, last but not least, we'll take a look at what's the average rate for conforming limit, or the median rate for conforming limit here in the U.S. It does have points built into it. So let's take a look at the 30-year fix is now up at 5.41 now percent, and then the 15 years at 4.84%. Now again, these still have points in there, and if you'd like to have a rate quote for yourself, please reach out. We will be more than happy to accommodate for you folks. If you guys like these videos, please help us out and smash that like button. And if you guys get questions about anything, again, we're here to answer anything. We'll try to get the information for you guys. Please feel free to reach out and ask whatever questions you guys have. You guys have a great rest of your day. Thanks so much for watching. We'll see you guys in tomorrow's video. Bye-bye.